Tony, an initial pop towards that 76.60 mark. It looks like that move has faded though.
Yeah, it has. And I think there's a number of reasons for that. I'm not sure that whether the RBA doing $5 billion worth per week or $4 billion a week is that important for the Aussie, given the backdrop that we've seen really since Jackson Hole. And if we look back at Jackson Hole, the Aussie was trading pre-Jackson Hole down around that 71 cent level. We saw some short covering into Jackson Hole. Aussie pushed higher. Then we saw Powell actually sever the connection between tapering and interest rate hikes. Lastly, but not least, we've also had some pretty big Aussie buying going through for dividend repayments and the weaker jobs data on Friday. So all of that is, to me, more important than what came out of today's RBA decision, which really is indicative by the fact that the Aussie pushed up towards 74.60, was up about 20 pips, and then it's back currently trading now around 74.40. So I was expecting a 20, 30 pip reaction regardless of the outcome today. We've seen that, but now we can start to look at the bigger picture here. And what we're talking about really is I think the Aussie has had a very strong rally, as we've mentioned, and potentially we're settling into a higher range. Now, I don't see the Aussie really powering on above 75.50, 76 cents is where the 200-day moving average is. But by the same token, I don't expect to see the Aussie retest 71 cent anytime soon. We've got pretty good risk sentiment out there for those reasons that we've already mentioned, the severing of the tie between interest rate hikes and tapering. I think the Aussie's going to be supported on dips now, so I don't mind picking up some Aussie if it was to get back down towards that 73.20 area. And on the top side, well, it's come a long way. I think you're going to see sellers emerge up around 75.50, definitely towards that 200-day moving average at 76 cents.
Tony, are you a fan of trading moves like this, a bit of scalping intraday if you see, a bit of volatility?
It depends on the actual flavour of what's going on in terms of the volatility. A 20 or 30 pip move isn't, it's nothing to be sneezed at. But by the same token, I'm sort of looking for bigger moves. I want to see moves 50 pips to 100 pips, and 20 to 30 pips is good for some people, and there's nothing wrong with going for that type of profit target, providing you can keep your stops in proportion to your target. But for me, I really want to see the bigger moves. So for me, the bigger moves are looking to trade around the extremes. And in that sense, I'd probably look to be fading the rally if it does extend up towards 75.50 and look to buy dips around that 73.50 into that 73 figure area.